Welcome back to this another live session, traders. Welcome back to another live session. Now you're looking at on gold. After the previous session, the market started to move, in fact, in a very predictable and trending direction. Here we had our previous session, a very successful trade, and you guys have seen the market is still moving in that direction where you open the position here on gold. Now at the moment where you're looking at this market currently in a trend, and in the trending market looking for potential another trading opportunity here in this market. Welcome, thank you. Now what expecting here in this market? If you look at that, this is long-term bull market, right? So which is pretty strongly bullish market structure, and in that bull market we can see the price is maintaining currently again a major directional trend direction here. Now we trade on lower time frame on gold, as you know that what looking at here at the moment in this uptrending market structure, that the price to give us a possible pullback here in this area on gold. So this is the intraday 4-hour time frame on gold, and you can see the market has created, this is a liquidity sweep here. Market has dropped to that level and then creating series of higher low in that area. There is a consolidation pattern with an inverted head and shoulder, or you can say that it's a reversal confirmation. Now see the sessions that we can see in this area. 3-4 hour candlestick pattern, 3-4 hour sessions here in that area on gold, and in this 3-4 hour session it was showing that it's a significantly bull market, and in that significantly bull market we can see the price is maintaining a very important structure that you guys can spot here, and I can spot. Can you spot that structure, sir? And I see me you start. Yes, we will be looking at. Thank you for confirmation. We had great feedback with the strategy that we are running on. Thank you. Now what we can see here in that area, the market straight bounced off this level here, which is pretty stronger impulsive move back to the upside. Looking at here in this zone on gold, okay, this is a bullish market structure. So if you look at here, you can see it's a bullish market structure. Now in that bull market, the trend is up, and before we look for that entry for this session, also we can look at the entry that we have just closed in our previous session as well. Now starting with the day, quite a few winning positions that on gold, and really important point that we can look at in this market, how the market structure is evolving over time here. So looking at this price action, if you look at from here, this is the 4-hour chart in this market, where in this 4-hour time frame the market structure is creating series of higher high and higher low. Now starting from here, you can see this is a breakdown, a complete breakdown, liquidity sweep, bounce back to the upside, another breakdown, liquidity sweep, bounce back to the upside, and this is where there is a bigger breakdown here. If you look at this move on gold on the 4-hour time frame. Now in this bigger breakdown, what we have seen that, guys, this is ceasefire breakdown with the news that we have seen, which is the fundamental. Now that breakdown has given significant momentum in the market. What is that momentum that we can see in this market? This is the momentum in the market that has gained the price action from this high here, complete breakdown below to this support level. And with that breakdown, what happened? The market has made series of higher low, and that breakdown that you can see on gold, if you look at, it's a complete breakup structure from the trend and to this previous support level. Now this kind of breakdown to key support level give a very important clue that what the market is trying to do for the upcoming days and sessions here. And then the price has rejected. Now when the price was rejecting, this is what even we can look at this structure over and over again on the lower time frame. Now this breakdown that you can see and creation of order block. All right, so this is the order block that you can see. So this order block that you can see is key to understand what potentially the market would do here. Now, as we discussed in our previous session also, when you see the market has created an order block, what does that mean to you? What does that mean, an order block mean to you? Very important point, right? Now, an order block mean to you that smart money again place their order in that area. And this is where you can see the market here created an order block. And from that order block, the market, what we have seen, that has broken back to the upside with one single momentum. Now this breakdown that you can see on gold, so if you look at, it's a pretty strong order block, and in that order block, this is where consolidation and sideways market. With that consolidation and sideways market, with the order block, the market from this support level managed to break back to the upside again. That means in this whole move where we can see order block, guys, this will change the way you look at the market, because smart money will not buy everywhere, right? There are some zone that is smart money buy the market. Let me give you the areas that potentially where the smart money has bought. This is an order block here, right? With this reversal pattern, order block, breakout, retest, continuation, right? It's a major order block, breakup structure, consolidation, breakout, and that order block is tested here and then rejected back again. And after this order block, this is another major order block in this consolidation here. And if you look at, there is one here, so this is also a major order block. So understanding that will give you when the smart money is potentially trading. So see, there's a volume here. The market has made more a big pullback, liquidity is grab and then form another order block, and the market is now pushing back again from that zone. So with this breakdown that we can see on gold, right, it's a complete breakdown followed by double bottom breakout again with one single move back to the upside here in that market. So in that order block, all right, so in that order block, the market has made its move back to the upside with one single bounce, which is a clean reaction to the upside with a bigger move back to the upside. So if you look at 3-6 session, it's maintaining an uptrending market structure from the order block. Now trading an order block is rewarding. Why? Because when you trade the order block, you are trading almost from the same zone as the smart money. The only difference is that order block is created by smart money, but as a retail trader, you are trading the order block. A little difference. That means when the smart money, you see this volume, this move is created by smart money. So there's a breakout from that order block, and we had few trades from that zone, you guys have seen. Now we can expect a retest of the order block, and that is where retail traders entry. We want to see the market has in fact managed to retest that order block, tested this previous resistance, which is turning support, and then return back again to the upside here in that market. So where the market is moving, let's look at now the lower time frame here on the 15-minute chart to see how the price has done. Now looking at very lower time frame, where is our entry that we have open position on gold, and how the market has moved exactly? Let's understand that why we have opened that position here, and it was only 27 to 28 pip stop loss. Now see this move that we opened position in our previous session, and the same trade was sent out in the community, in the premium group. How can you open a position with 5 to 1 reward to risk? This is what I'm going to show you guys. Not all trade we can take 100, 200, 300 pip, but majority of them we can trade, and I can show you. You look at the date and you see the trade, how many pip it was. The entry at this trade, entry at 4049.47, the previous trade. This trade that we can see, we entered in this live session 4067.59. Now what was the reason for the entry? The education is key here. We focus mostly on educating the traders. What is the factors that we considered when we open trade or the position in this market? Look at this here. The market opened earlier with the Asian session. There was a stronger breakout. This is what we expected in the beginning of the session, and you guys have seen probably the analysis that was posted during the weekly Forex forecast and other analysis that we have done. And the market has shown that reaction in that area. Now, how did the market has shown that pattern to show up here? This is the market structure. Looking at the previous resistance line, which is turning support here in this market. And why this level was so important when we were entering the trade here? Because we not only consider the entry level, also we need to look at the past. You know, the past always will help you to understand the future. Everything repeats, right? Even in our thinking. According to science, a human being thinks 60 to 70,000 thoughts in a day. And in this 60 to 70,000, 90% of them repetitive. That means what we have thought yesterday, 9 out of 10 we think today, and that's why you'll see that repeats everything and then recreate, redo, repeat. That's how everything goes on and on. The market does the same thing. If you look at the past, what do you see here? The market has created this high here, drop to that level, form an order block here, drop to the same level, form a consolidation with this series of high and low, breakout. Come back down for a pullback. What we can spot in this pullback, the attributes that I would say that of this pullback. Paying attention is the key, guys. As I mentioned earlier, paying attention is the key. If you pay attention, you start to learn trading just a matter of few days. It's not hard. You know, anything you want to do, you need a diploma, 3 years, and then another 3 years work experience, and just to make a living or competing with hundreds of thousands of other employees. And also it's getting more harder now, right? Coming up AI, and that's why our system now showing us that how here things happening. Now look at that point in that area here. We see that this is the previous resistance here, which is turning support here. And that resistance turn support created a significant mirror level. Have you had a mirror level ever? Very important. Can you respond in the live chat that if you have had a mirror level? Welcome. We see that breakup structure here. Potentially, we'll be going to that. Hello everyone, thank you. Now mirror level, right? So we are looking at the mirror level. Thank you. No, not selling because it's a bull market. I don't ever think of trading against the trend. Rather, trading with the trend is the smartest way to trade. So we are not gonna sell no matter how deeply the market drop at the moment. I will be explaining later on what we are looking at here in this market. Welcome. Now, if you look at this market, the mirror level that we discussed, what is mirror level, right? Mirror level is very powerful. It's more powerful than a key level. Now, mirror level is when you see that a market created a resistance or support, at some point has broken that resistance, tested that level, potentially rejected back again. That's a mirror level. And the reason the mirror level is that level, if you look at, especially look like a mirror. And more often 2 with 2, 3 with 3, 4 with 4, similar kind, or could be little different. But the level that has acted here in the past, a strong level of resistance or support, this is a very strong level of resistance, is the market strongly rejected from that level and then has gone back up, again strongly rejected twice, final has broken out, tested once, tested again, and that's a mirror level. When the market rejected or bounce off this mirror level that you can see from here, as the market bounce off that mirror level, the price is indicating that this market potentially to remain bullish. And that's a very important point, because as the market got rejected, welcome, as the market rejected from this mirror level, our entry in that area had a confluence that this market is about to have bigger move in the direction of the trend, but it's still we are waiting for further confirmation. Now, what is the entry that has given us, right? Looking at here. Now, what is the reason of my entry? Now, as you know that many of you following me for a long time, thank you for that, and you know that I mostly trade liquidity. That means I'm a smart money trader. That means I trade based on smart money volume in the market. Why it is so important for me to know when the market is grabbing that liquidity? By understanding it, you also understand that the only way to be profitable in this market for long term is to trade based on smart money, based on market structure, based on liquidity and price action. Nothing else. You only need these three pillars in this market: market structure, liquidity and price action. Now, this is 5-minute chart and I'm replaying that chart. What did I thought? So there is a saying that if you read a book from an author, and then what do you read from an author? If you read a book, either for trading or for anything else, reading a book means that you are accessing the mind of the author. Because the author, what he's thinking has translated into a book, and you are taking the thought into your thinking. So this is a kind of transfer of data or information from the author through a book to your thinking level. So the same thing, you're just watching this live session. So I'm giving you what I thought so that you can also use the same information, guys. Pure giveaway, right? That will change the way you look at the market. Because what worked, and all the time it's gonna work if you can see the variations, if you can understand when you should be looking at this kind of setup. Now see that once the market has rejected from here, it created on this lower time frame a bullish impulse, which is 140 pip, and then pull back to almost 50%. How does this green candles and red candles has formed in that area? Whenever the market is coming down, rejecting. Whenever the market is coming down, rejecting. So that's an area, that's a zone that you can see the market in a sideways break of structure, rejected back to the upside here in that market. So those extended lower shadow represents that when this candle has formed, first when this red candle has formed, the buyers bought this market, and then when this one formed, again bought this market. So every time it is extending below, is actually gaining more and more liquidity for another move back here in that market. And finally we saw the market has created, this is the entry candle. Why? Because it has extended to this doji here, which is the absolute low of this move, and that is where the entry, because if you look at this ATR of this case, it's more than one ATR in one direction. It's tested this key support level, and the long-term trend here is bullish, and we can see the market bounce off that level. And we saw the multiple times also the market tested this same level, which is still moving in the same direction of the trend. And once you see that the market has formed those structure, okay, once you see the market has formed those structure, we are about to go long or short from those areas. That's a simple way to trade. Now the next thing coming up is what risk level you'll be taking for each trade that you will be opening. So we need to look at the key level or the mirror level that we discussed for finding entry in the major direction of the trend, and then from those level let the market move with creating a price action pattern that can change completely the way you look at the market. That being said, we have secured the profit, we have taken the trade, and not only that, if you look at the previous few trades that we have opened, now this one, the entry was 40, this is another trade that we have taken in our system, 4049.47, and stop loss at 4043, and TP target set at 4078. $300 pip on this trade, followed by the previous one. This one is 100 pip. So today's market that you can see has moved significantly, and absolutely. So where, if you look at this market currently, be potentially heading again for another entry. Now I'm going to look at here. Now from the 1 hour perspective, as the market was maintaining this uptrending market structure, as the market is maintaining this uptrending market structure where the price is creating series of higher high and higher low in an uptrend, we are looking to see the price is, if you look at from this support level, you can see the market is maintaining series of higher low in an uptrending market structure. Now in that series of higher low, okay, so if you look at the low of this 1 hour candle, what do you see? Every candle maintaining this series of higher low, which is in an uptrend, and where the market has dropped to that support level in that area, but the market is coming back in this zone where the price is approaching this lower time frame support level first time here, which is breaking back potentially below and giving a possibility for another entry as it is a bull market. Now, looking at 1 hour chart, what we need to see here now, the same kind of setup, a break of support and then showing up that the market has prepared for another potential bounce in one direction. I'm in short on 4079. I'm not gonna sell. Gold is bullish. We might see that some kind of downside or break of structure, but it's a bull market, so you're only looking for bullish setup. Now, this is the candle close and the trade close. Now, what we are looking at here, now the trade that was taken on our group, that if you guys looked at, the same trade was sent also in the VIP, in the premium group, where with entry, stop loss and take profit target. The goal here is to take a trade from in such an important level that most of the time will move in the direction that we are looking at in this market. So looking at here on gold, maintaining this series of higher low. If you look at series of higher low, which is creating that the market structure is bullish. Now here is the support with a long wick doji, and that is what we look at, that there is a doji, another doji, expecting the market to break that low. When we are looking at now a potential break so that we can enter again in this market. This is the market structure that you can see. The price has maintained this series of higher low, which is in an uptrending market structure, and the current support level, which is key support level, from the 4-hour chart that if you look at, this is the intraday move that we have seen in this market. This is the 4-hour candlestick pattern. As the market is completely broken above, the price action is still showing that it's gonna potentially remain bullish, and breaking this low could bring even the price back below to this support. This candle from the 1 hour that I am going to identify here, another important entry level that we can look at. So this candle is a specifically important candlestick pattern that you can see. So in that specifically important candlestick pattern that you can see in this market, okay, so this is where the resistance, the price extended above here in that area, and with this extension, which is an overextension to the upside, and with that overextension, we can expect the market to potentially drop to this support level here. And that support that you can see in this market, this is a stronger bullish candlestick pattern, which has shown, if you look at, there's one here and there's another one here, and in that market structure that you can see, the price has created a support level, And as you can see, with this movement on gold, there is a series of higher low, and the market now trying to break below to that key support level, which is a key support here. And as the market coming down from this overextension above this long wick nearly to 280-hour bullish candle, possibility that the market to retest that support can give another big opportunity here for this market to trade in that direction. But at the same time, it is likely that the market could even reject in between this support and resistance in this market. So that being said, looking at here, that the market to potentially come down to retest and then to return again back above here in that market. So this is what we're looking at. This is a very key support level where there is an important area of value. The price tested that level and then the price has rejected back again here in that market to create potentially new higher high. Looking at here for this move back below, so this is where the market has created this bullish channel that you can see on gold. And in that bullish channel, guys, we can see this is the 1 hour support level, which is there is an order block in that area. And in that order block, if we look at this 1 hour support where the market has made its move back to the upside, lower time frame price action is approaching that support, expecting the market to penetrate back below and breaking below here. This is a very important key level. As you can see, also we see this is a mirror level. The market has left here and there are two possible scenarios now. The market to break this trend line and then to create a new lower low, potentially come back to this mirror level and then reject back again, or we could see the price to reject from the first break of this series of higher low. Now series of higher low is important because as this is where the market was maintaining this channel in that area. Now at the moment we can see the lower time frame price action. Again, looking at the 5-minute chart, it is showing that the market potentially to drop down here further, which is potentially giving another opportunity for us to go long here in this market. It's a bull market. We are only looking at buying in this market. when we are looking at especially the lower time frame entry, always the best way to enter, and not only the best way, the only way to enter on a lower time frame is based on the multi-time frame approach. Because if you are not combining the lower time frame with the higher time frame, it's very difficult to know how the market is structured on the higher time frame, because we don't want to trade against the major trend in the market. This is very, very crucial, guys. If you look at the 5 minutes now, if you look at only this zone here, it's in a downtrend, and that zone that you can see, it's a downtrend, and we don't want to enter in a sell trade here. Why? Because going back to the 4-hour chart that you can see, it's a strongly uptrend. Very important. You see that how the 10 and 20 EMA crossed over from each other. Now, crossing over of 10 and 20 EMA is another best way to look at where the market is in relation to the EMS, because EMS are a very important indicator to understand that the price in relation to the 20 EMA. 20 EMA is like a rubber band. When it's go too far, you'll see that the market reject back again in that level. And you can see that also the market has broken out of the order block that you can see on the 4-hour chart. And because the market has broken out of the order block, and lower time frame market structure is showing up to be bullish, we are looking to see that this market is currently showing up to be bullish. And what is the most important part that we need to look at when we are making our trading decision from a key level or from a mirror level is not only the price on a key level. So the price might have come back to a key level or a mirror level. We might consider buying or selling. No, we need to see not only how the market on a key level or a mirror level or an important area of value, but how the price has reacted to the level, which is the most important criteria of entering into the trade. Now, looking at again to the previous trade that we have opened. Right, so we entered exactly in that area, and that entry, if we analyze the market structure and the price action, we didn't enter from the key level, right? If you look at this, the price has come back here. We did not enter from this key level. We have entered once the market has broken that key level. This is our entry candle, this red candle. If we mark it, this is our entry candle for the trade. Now, why this is an entry candle? Firstly, it has tested this key level. It's a lower time frame key level. The first doji has formed here is the key level. The market has tested the same level with a longer candle and rejected back from that zone. The market has retested and reacted back again to the upside, and that's where the trade was open. And you can see the market still didn't come back to that level. It's still trading above that area. Once you can identify the levels, it becomes much easier for you to enter over and over again once the market drop. And the previous later we have seen the price has dropped to the same level For those who didn't enter, we had another opportunity to enter from that zone here, and it just bounced off that level with the one single move back to the upside. Now at the moment we can see the market is trading again, and this is the lower time frame price action that you can see the trend is now breaking out of this trend line. Always look for the break of the structure. That's where the true secret of entering the trade on a high probability setup. Wait for a break of structure, and once you see the market has broken from the structure, you are set to go, because break of structure is the primary indication of smart money volume in the market. And see that here, if you look at a market trending, creating series of lower high and lower low, break of structure to the upside. In majority of the time, you'll see when the market breaks from the structure, it creates the pattern that you can see. And once the market creates a break of structure, you are ready to enter? No. This is another mistake that most trader does. You see that here, break of structure, still not ready to enter. What you need to wait for on a break of structure? Because this break of structure could be a reversal and continue to bounce back up, or even if it is not a reversal, still you could see the deepening, and you don't know still yet how far it's gonna extend before it come back again to the direction of the trend. So break of structure must be accompanied by a reversal pattern or an order block formation. So what is an order block? Look at this guys here. Every order block break of structure, you'll see that there is a way to understand that the market is in fact potentially preparing for a move. Though nothing is certain, you can predict 100% all the time in trading, but in principle you can, majority of the time, over 90% of the time, you can predict that what kind of structure and the market is biased to. Look at this one here, double bottom, right? A textbook double bottom. And what the market did here, see that here. This is what you need. An order block formation, reversal pattern, breakout from that, retest, boom, bounce back to the upside. And you see the same thing even when the market is coming down here. And you see that over and over again, the market will keep doing it. And that's the repeat. That's the repeat that you need every time to enter into a trade. And that's where the best trade entry comes in play, because when you can enter from an order block, you are more often are able to catch bigger trade. Okay, so this is what we did in our academy as well. You guys have seen already quite a few clear trade that was taken, and I have already shared many of the information that this is the trade using the same system when you can enter in the right time. Look at this trade is 300 pip, one single trade, 300 pip without anything. And look at the time frame that it has opened, that 5 minutes and 1 hour, multiple time frame. Every trade that I open, I must consider the multi time frame. I never open any trade without multiple time frame confirmation. One trade, look at the date, and 300 pip in one trade without any profit taking in the middle. It's one single flow to 300 pip. And I have shared already the live recording of those trades in the premium group. If you're our VIP member, premium member, you can check out the live recording that I have given when I have opened the trade. The next trade, 100 pip. See the stop loss, how many pip for each trade? This trade, stop loss only. Entry at 4052.72 and a stop loss at 49. I have a separate expansion of that trade. Let me bring that up. This one. See this trade. Entry at 4052.72. Stop loss at 4051.10. Look at the TP target here. 4060.94. Right. Exactly nearly to 100 pip. On one trade with only 17 to 18 pip stop loss on gold. And there is no profit taking anywhere, which is 1 minute and 15 minute chart based on multiple time frame entry. Today's date 13/10/2025. This is the timing, and see the trade exactly executed and taken out of the market, followed by multiple entry and taken out of the market. Now, is this possible to trade this market consistently in any time frame? I have shown you guys. Now, at the moment, the market has broken from the trend line that you can see, and that trend line break that you can see in that area, which is potentially coming back further below here, and that breakdown that you can see from this trend line waiting for further deepening, and then we can look for another entry. As the market has broken from this channel, it could deepen its movement. From the 1 hour perspective, if this 1 hour candle straight drop to this below this level and close above, we could straight away enter into the trade. We might see now potentially further pullback below before we enter into this trade. So the market structure currently showing that it's still trending and could continue to trend further down here to this key support level. And that's what we're looking at in this market on the lower time frame, for the market to potentially drop down here further back below to this key support level. And that's where we are going to enter into the trade here in this market. Welcome. My TP for Thor on dollar yen. My TP 4060. 4060. So you got a sell here. One of the most important criteria to be as a trader is to trade with the trend. No matter what, even if we have losing trade, still trading with the trend is the wisest decision you can ever make. Now, if you are trading yourself, for those who are following me, you know that more often I do every trade that I am opening, sharing the details of the strategy, the reason behind the trade, which is very important to look at, because without a strategy, without knowing why you are entering the trade, is not the right way to trade. It's random entry. You'll never be able to be profitable over the long term. Because when you're trading with the trend with proper risk management, that means that you do the lot sizing. How many of you are competent in calculating the lot size? Though if you are using any tool, then definitely it should be automatic. But if you're using on your manual entry, then you must do the lot sizing, which is, there are many apps available. Now, trading with the trend is, if you look at the every trade was open and every strategy that I use, 70% of the strategies decision making, because if you look at entry on any strategy has a different criteria. For example, you'll hardly find a strategy, for example, only buying from moving average, for example, or selling from moving average. That has to have other confluences, right? It has to be aligned with support resistance, has to be aligned with some other confluences, depending on what kind of strategy you're using. Some people only use this Bollinger Band, right? You can see that. Bollinger Band can be a strategy as well. But it has to have a solid, clear guidance of the reason or the confluences behind the trade. And that confluence has a weight behind it. For example, if you look at a market that you want to enter with bullish engulfer on a support level. Now you can add confluence. Okay, I will be entering the bullish engulfer on a support level, but it has to cross 20 EMA. Right? So this could be now two confluences. While bullish engulfer is one confluence, adding the market to cross 20 EMA is another confluence. Two confluence you are adding in one strategy. But both confluence may not have the same weight or value that you need to enter the trade. That means to be a bullish engulfer, if it is 70% confluence or weight, to touch the 20 EMA could be 30%, for example. That means even the market doesn't touch the 20 EMA. If there is a stronger bullish engulfer on a support, I can enter with a confluence. But if there is no bullish engulfer, the price has just touched the 20 EMA, is 30% weight on it. And I will never enter into the trade because it can be easily a reversal. So this is how the weight is considered in a strategy. That means that how confluent or edge it has or input in the strategy, because the goal of a strategy is to make over 50% or 20% or 30%, depending on your risk reward. If you have a risk reward which is 5 to 1, reward to risk, you can keep profitable with 25% to 30% win rate. But if you have a strategy with 1-to-1, you definitely need over 60% win rate to become profitable, depending on your risk reward confluences, depending on how you will be entering into the trade. So 70% of every strategy that I use, not only me, every professional traders uses the trend as a confluence. If you are trading with the trend with a simple strategy but keep a very strong risk management plan, even from a simple support level, over the long term, if you can keep your discipline in check, you can remain profitable. So that is where we are looking at here in that zone. You can see this is the gold price action from this support level, made it move back to the upside here, where a stronger breakout with an impulse back to the upside, and you can see the market from this order block has created that impulse back to the upside here in that market. So this is where the price action showing up to be bullish here in that market. Now you can see after break of this trend line, it's now up again to the major direction of the trend, but our expectation is further lower. It might try to break again, but at the moment we see it's up again. 4-hour chart is showing up bullish. The current low is 4071. We still have time to enter, and that's what we will be waiting. But at the same time, we can see how the market is reacting to that level. Dollar yen. Now we can see the price from this double top, and again it's trying to break that low. The possibility for further deeper pullback is higher, and also we could see new higher high that's also higher, but the possibility here that this market to deepen this pullback is still higher, as if we look at this channel is already quite a bit. This channel from here made it move back to the upside, drop to that support. So the market is maintaining series of higher high and higher low, which is in an uptrending market. Coming up tomorrow, very important news on this is tentative on dollar, which is also will be responsible for gold to be volatile, which is making gold as well volatile, and that is where you can see the market potentially to be bullish remaining, and we could see that further movement in the market as tomorrow's speech would definitely will make this market pretty moving. That so far we can see that today's market that the price has created significant bounce of this level, that you can see the market is maintaining this uptrending market structure here in that area. So where the price is showing up that it's still maintaining that uptrend, you can see this is a channel, and that channel is remaining upside in that area, which is showing that the price potentially continue to rise back up here to create a new higher high in this market. There's an order block that you can see in this area here, which is pretty stronger order block, and in that order block, if we look at the market structure, has formed a bullish move back to the upside here in that order block, and from that order block again the market has rejected back above. It's on a resistance line. That means that the price on a new all-time high. This is pretty exciting, guys. You can see that every time the market is crossing that zone, it is in fact creating a new all-time high. So the market now at 4085 level, right? So the 4085 is the new all-time high. Now with that new all-time high, we are nearing to heading to 5k on gold, which is I think not very far, not 5k, 4100. Pardon, we could see that 4100 approaching very soon on this, so which is the market potentially to reverse back up again. Now at the moment we can see the price is dropping to that that previous support level that we are looking for an entry. It has created a new all-time high and forming a lower time frame. If you look at the 5 minutes chart, which is forming a doji, if this doji is a rejection, we could see the market to come back here to this support level again for an entry opportunity here in that market. So this is what we're looking at in this market, for the price to possibly to come back to that key support level, which is approaching that area that we are looking at in this market, to break this order block again. It's still maintaining an uptrend, it still could continue to go up, and we want to see the price has managed to drop back below before we look for entry. Two important reversal pattern here that you can see. One is here, if you look at, and there is another one is here. Two key level that you can see the market. Here is one, here is one, here is one, here is one, and also here is one. So those levels that you can see on gold is showing up that this market to potentially remain in the major direction of the trend. So those order block or those reversal pattern has given the market boost once and again. Now if this market breaking from that all-time high, potentially that the market to come back below here to this, any of this, breaking any of this support level could give an entry opportunity for us to go long here. Now at the moment, no sell, no buy, because the market in a zone where we could see that deeper pullback. Welcome. trapped on a, as I mentioned earlier, this is on a bull market. We're not going to look for any sell in this market. What strategy do you use? What strategy do you use? This is what we are discussing. We are discussing about the previous trade that we have opened here, and we use simple strategy based on smart money system. How do you identify a smart money system? This is what first thing we need to understand when we look at the market on a lower time frame and also on the higher time frame. Smart money trade based on order block. Okay, how do you know also that in relation to the market structure where the price is at? Okay, so a fundamental or the basic GPS of the market, if you look at, so if you look at a market, an impulse correction, right? So this is a bull market. If you look at a bear market, creating series of lower high and lower low, but this is a very ideal market structure. You may not always find like that. When a market trend, right, like this, it will never trend in one direction. It must change at some point because what is coming down must go up. So how do you see the market has changed that trend? Now, to understand that change of trend, what we need here is that this market to potentially to create a structure, either sideways market or an inverted head and shoulder pattern or a double bottom, any kind of market structure that it has to create before it reverses from that level. So that is where the smart money order block. And once you see the order block, price has broken out of that order block, retested, and now trending, creating series of higher high and higher low. So those order block is the most important part, because once the order block is tested, the market start to change. And one of the very important point that we need to look at is, as a retail trader, we can enter at any point. We don't need to wait for liquidity. Smart money cannot enter straight away like us. They need to wait for liquidity, because whenever they're buying, because the volume is bigger, the market goes up and they don't get enough price for their entry. And there's a profit taking, that is a pullback. And again, another bounce, pullback, and the bounce, the market maintains this market structure, creating series of higher high and higher low. And if you look at those market structure, also again, it at some point you'll see the market will break from that structure. Doesn't mean that it again changes the trend, but it means that it potentially again prepare for another move back to the upside, and that's where we want to enter on a next order block, because whenever the market breaks from the structure, it create a pattern. As you can see, the market started to break below again and coming down to that support level where the price action is showing up to be an important support here. And now you can see after creating an all-time high, the price again breaking down back below, which is from the 1 hour chart that if we look at, getting the rejection back below, and the 5 minutes price action that it is forming comparatively bigger red candle. So if you see that wider, bigger candles, better to wait to see if there is a bigger volume, because it's rejecting from an all-time high. It could depends bigger than what we have expected in this market. We see that the market slowly breaking from this all-time high, and this breakdown that you can see in that area to come back below this support. And I'm going to look at from the fresh perspective. Now this is a channel that you can see the price has made initially bounce from that level. Currently it's breaking out of that channel, and that breakdown, that breakout from this channel could lead that market to trend down further here in that area where the market is coming down, and potentially to test that here, and that's where the price action is potentially showing up here in this market. we see that rejection back below here to this support level, and that's where looking at this market to potentially test that support. And if we look at the 1 hour again, we can see the market, the candle is closing with long wick candlestick pattern here, and the price is approaching that support level from the lower time frame. And as there is initial bounce, are you going to see a rejection back again? That we will be understanding from further lower time frame here. As the market getting rejection from this all-time high, we could see the price to deepen further back below. Understanding key level is very important to see the market where it potentially be bouncing off. Now, this is what happened the previous trade. In the previous session that you opened, exactly the same kind of pattern. We can see there is a complete breakup structure to that mirror level. Breakout from that mirror level again, rejected from that key mirror level. The mirror level is very important because it has the same level acted here as a resistance here, which is turning support here. And that mirror level, as the market has shown up to be a completely a rejection from that level, as the market rejected from this mirror level, which is showing that this level is strong and the market may hold on to that level later. But you have seen that the price has tested that level multiple times, and if you look at the lower shadows of those green smaller 5 minutes time frame candlestick pattern, you can see that there is a liquidity sweep in that area. Why? Because every time there is a new long wick candle is being created here is where there is a clear liquidity graph. Finally, we saw that there was a one single red candle drop to that level and bounce off there. We had only, with this trade, only 28 pip stop loss. Not only that, most of the trade that you opened in our system is a very smaller stop loss with a bigger profit target. If you look at here, this is one of the trade that we have opened quite a few earlier today. This is based on 5 minutes and 1 hour time frame, multiple time frame entry at 404.49.47 with this trade. This is earlier open during the Asian session. The market exactly bounce off the level. The stop loss at 4043 and TP target 4078, nearly to 300 pip with this one single trade. 300 pip. Looking at the next one that was open, 100 pip, one single trade, only 18 pip stop loss. Entry what? 4052.72, stop loss at 4051.10. How small the stop loss can be in gold. And you can see the market didn't look back up, directly straight bounce back to hit that profit target on this lower time frame. Understanding key level, understanding when to enter, and understanding that how to hold a trade for bigger profit target is only you need to manage a trade, to enter a trade, and then based on the entry, keep repeating the same system over and over and over again. Trading is very repetitive, but that's rewarding, right? That's our goal here as a trader, is to find out a system that we can repeat. It's like a sine wave. Okay, so if you look at sine wave, repeat, right? The same thing, repeat over and over and over again until your account reach to a certain profitability. Another great thing with trade is very subtle but unbelievably important. as a trader is to look at the compounding effect. We only look at, okay, I have a smaller account, how do I trade with this strategy or with that strategy. We never think of the compounding effect and how it can be if you can consistently repeat something over an extended period of time that works all the time, right? As long as you have an edge in the market, it should work all the time. Because if you flip a coin randomly, you always will end up with a bigger number, nearly to 50%. Add one confluence, trend, and another confluence, proper entry criteria. You will never be a losing trade. The only thing, if you want to speed up, that's what we are doing in the academy. You need high probability trade setup, and it's as simple as you can see we have entered here, as simple as I have already explained, and all those strategies that I am entering also clearly explaining the full details of the strategy. And that's how the trading is, right? Trading is not theoretical. You can't learn trading by reading book, never ever. You need to trade, and you need to see how the trading works. You need to see directly, trade on the account, so that you can have that understanding of how trading works. We see the market here breaking that low, approaching that support level, and looking for that entry again in this market. Looking at calendar, coming up tomorrow, another very important trading days, and that could change again the market structure, as tomorrow there will be speech coming up, and that's gonna make the market move again, especially starting with the London session time. We'll see the market is moving again, followed by next day also another important day in terms of AUD, which also will bring dollar and as well as gold in another movement, will bring another volatility in the market, followed by also GBP, and then NFP again move to the week after. So it's just shifting from week to week. So basically we could see that NFP ultimately going back to the next NFP most likely, as it was this week and then move to the next week. So it's gonna finally potentially could go back to this one here. You might see The market structure again trying to build that momentum back above. This is the 1 hour candle closing in 1 minute time, and we can see it's still showing up to be bullish in that area, so which is that the price potentially to break above again to create a new higher high in this market, where the price is showing up that you can see the price is maintaining this uptrending market structure here in that area. So looking at that level, that the price from that support created a bullish engulfer, and that bullish engulfer is showing up the market potentially to trend and could continue to rise back up. There's a long wick at the top. We could see the price to fill that long wick and then to trend back above. With that break below here, we saw there was a liquidity sweep. The market may continue to trend back again in the major direction here. Still moving back to the upside here, which is a kind of range, but it's still creating a series of higher high and higher low and then ranging in that area. We see the market is breaking from that level. Here is the price from this support level bouncing off that to the direction of the major trend, and breaking below here could be another zone that we will be looking to enter as with the progression of the invoicing. We might see the increased volatility in the market, and if it is breaking out of this channel and started to move up with a new trend, we might see that new higher high. But the best entry will be like the one that we did in the past, the previous session, a complete break from that structure. Especially this is the previous entry where the key level, and also there's an order block here that we discussed. This below this level, this is a pure imbalance. That means that fair value gap. Now if the market break that fair value gap, gonna be a big entry again for upside bias. Coming to that fair value gap is essential for us to enter, as with this channel there is a very important criteria that you can see. The market, the candle is not closing above this area. If you look at here, you can see the candle is not closing above. We see the market rejected back from that level, creating a multiple rejection sign that the market possibility break that support level here in that area, and that support is what we are looking at for the market to reject from this key level of support for us to enter in that trade of this market. We see the market again, we see there is a breakout with a retest of this order block with a one single drop back to that order block. The market again bouncing off that, showing that the market potentially to trend again in the major direction. You could see the price to continue to rise back here to create a new higher high in that market. The market structure here again catching back to the upside here from this support level, which is has formed this break below to this order block, bouncing off that level, creating potentially new higher high, which is again trending back in the major direction. That you can see the price is maintaining this movement back above in the uptrending direction where the market is heading back again. If you look at the 1 hour, you can see the candle close, which is nearly to as a bull candle with a long wick at the top. The price again going up to fill that long wick, which is showing up that this market is maintaining this uptrending market structure, which is very important to look at here. Now, as the market has broken out of this channel, and as we mentioned earlier, it has broken out of the channel from this order block, we see that the price is maintaining this uptrending market structure. We could see the price to continue to rise back again to create a new higher high. So looking at this market from this support level, strong breakout with one single impulse, the price currently above this key level, and for us to enter again, you want to see deeper pullback. As in our previous session as well, we have entered in this kind of market structure when there is a strong breakout, pullback with liquidity gap, and the market is still moving from that same level that we have entered in this market. Here is the currently breakout again, which is showing up to be bullish back in this market trend again to the upside. One system can change everything that you trade. How can you find a system that can change everything you trade? Looking at this trade that we have opened in our system, only 18 pip stop loss, 100 pip profit target based on the multiple time frame analysis. This is the 5 minutes and the 15-minute chart. Every trade that I open use multiple time frame. Now if you look at the stop loss pip and profit target pip, the entry at 4052.72, stop loss at 5051.10. Smallest stop loss can be in this strategy. And then profit target taken to nearly to 100 pips. Smash that profit target directly in one move in that direction. Can you achieve that accuracy? That kind of strategy that create a metal wall of your capital and a swift and a smooth growth of your account. It is possible, right? It is possible to be like that as a trader, to be consistent and to be fluent as a trader. I'm showing every single day, posting all those trade as well as also all this explanation and the screenshot to explain to the member how it is working. Because our goal here is to not to give you a fish, not to give you a trade only, but also teach you how to trade and how to fish for yourself by teaching you giving you the strategy and also giving you the details of the strategy, how you can trade like this as a trader every single day in the market. FBG, yes, we can see that the market is trending. The market is trending. That's what you need to look at. There's a bank holiday in the market. Okay. Does the bank holiday prevent volume in the market? Not at all. Bank holiday will not prevent volume in the market. No holiday even can prevent volume in the market. Why? You see that weekend gap? Why does the weekend gap happen? Look at Gbpjpy and dollar yen. Even on gold, there is a massive gap open over the weekend. Weekend is holiday, right? Everywhere, universally. Why does this weekend gap occur? Have you ever asked this question? Be curious, guys. Intellectual curiosity makes better trader, according to research. So if you are not curious, you can be curious by asking multiple questions. But if you are curious, you're welcome. Intellectual curiosity makes better trader. So if you look at weekend gap, why those gap happen? Because over the weekend there is some event happened that influence the market. The volume changes. Some institutional traders more often take that advantage of not being able to retail trader trade over this weekend, and they place their order, close their order due to certain upcoming event or the news that published during that market sentiment changes over the weekend. How do they do that? They can, institutional trader can trade over the weekend. They can enter the trade over the weekend. They can close the position over the weekend. So no holiday can prevent them from opening or closing their position. They have that access. That's why this weekend gap happened. Because the position that you open, let's say you keep a position opened over the weekend, running trade on Friday, Saturday, sentiment change. A big decision has come, the market from bearish to become bullish. But you don't have any opportunity to close that position, right? And as soon as market open, bounced such a big gap that straight away went back to your stop loss. Even though you'd close this position if you knew that this has happened over the weekend. And that's a big advantage that institutional trader has. So therefore, no holiday can prevent the volume in the market. Now, sometimes we see little lower volume, especially in Christmas period during the time on December. Other than this, in most of the time, you'll see there is a volume in the market. And the only way the volume drops is when a big decision is awaiting to happen or awaiting to come. In that time, the volume drops, because that decision might change the overall market sentiment. And those low volume, in fact, an indication of a bigger volume coming up in the market. So you can see all of them happening in the based on the price action in the market. This is a long wick doji that you can see the market trying to break that low here to this support level. Could potentially break further low and then could bounce back off this level. We had a previous trade that we opened and we can see the lower time frame again, the candle close on the 30 minutes chart. Going to start a new fresh analysis as the market structure again has changed. Look at this guys here on the 30 minutes chart. It's a sharply bullish trending market here. And in that bullish market, the price is still maintaining this higher high, higher low, which is uptrend, and potentially continue to trend back up. And this is a support. The market has made a small pullback and the market is maintaining this series of higher high and higher low, which is in an uptrending market structure. On the lower time frame, showing up to be significantly bullish. Breaking from any of this structure could give another entry from this, breaking any of this support level here in this market. Some of the trade was moving as expected in the direction of the trend here, and which could continue to rise further, and with this trend line it is maintaining on gold currently. And looking at the daily chart, the price has, after this pullback, managed to break out, and with that breakout it is still maintaining that uptrend. Today's price opened with the first day of trading week, pretty sharp bullish move, waiting for this market to trend again in the direction. So 4-hour chart that you can see, after the order block, the market has broken out of the structure here, and lower time frame again showing up to be significantly upside in that market, where there is the trend line is pretty smooth that we can see in that market. And from the trend line, one uses the price to break that low, retest, and then to return again back to the upside here, breaking to the upside with potentially further momentum in this market. Breaking that upside here in that market, which is showing up the market continue to rise back up again to create a new higher high in this market. The market structure from this support level again has managed to break back above with a multiple liquidity sweep here again from a 5 minutes bullish engulfer, which is showing up to be upside here in that market. This is a complete breakout in that market and potentially continue to trend back up here to the major direction. You can see there is a 5 minutes bullish engulfer which is showing up the market to trend back up and potentially continue to rise back to the upside here to create a new higher high in that market. And here is the lower time frame price action that you can see the market is pushing back up for this upside bias, where the possibility to continue to rise back up is higher. So we're looking at that pullback again for another entry. The previous trade that was opened from this level is still maintaining that move. And if you look at, we had only 28 pips stop loss from the entry, the smallest possible in that zone. It bounced off that level. And finding a zone is important, because especially when you see the market crossing those areas where there is a high liquidity, that's what we are looking at, the market to retest that high liquidity and then to bounce off that level. We see the price action is showing up to be exactly in the same manner. And lower time frame price action on this zone, that you can see the price from this support level got the rejection back above, and with the rejection now would like to see the price to break below here to this support level and then to return again back above in the major direction of the trend. Very important to look at that the market is showing here an impulse, and that's where our key zone here to look at in this market, to show up that the price action is going back up in that direction, which is a very important support level. Now would like to see the price break from the trend. Now we are waiting for an entry, another trade from those key level, though we see that the market dropping those support level, getting the reaction but not still overextended in one direction. That's where the entry is. If you look at the 4 hour, deleting all those levels that we will be refreshing here, 4 hour market structure is still maintaining this series of higher high and higher low. So if you look at from here, you can see it's still maintaining that series of higher low in that market. And with that series of higher low, okay, so if you look at that series of higher low, which is potentially a bull market, and you can see it's breaking back below. This is the current support level from the 1 hour. If the market breaks here now with this candlestick pattern, we will be looking into that entry, as this is what we need. One single drop back below with a bigger momentum. Coming back below here for this potential drop, this 15 minutes candle to close few minutes later. There is no high impact news today. Potentially you could find an entry. This is the current 1 hour support here in that market that you can see the market structure. There is a long wick that you can see on the 5 minutes, another liquidity. So you would like to see the price to potentially extend to this support. We might see that extension as the market structure again showing up to be significantly bullish here in that area. As the support level, the market is approaching that key zone, and with this key support you can see the market again. This is the 15 minutes price action. The candle close could come back further below, and we will be looking into the entry as soon as we see the market has managed to drop to that area that we are looking at in this market. We'll be waiting for this candle to close, and I think the market potentially to reverse further back below before it eventually could bounce off that level. 1 hour candle close also coming very soon, and this is the 1 hour price action. Would like to see it's coming back to this support where we can look for that entry with the 15 minutes candle close coming in few minutes. Are you guys ready for an entry? We'll be waiting for this 50 minutes candle close, and if this one closing or testing further back below, especially this candle, this green candle, which is a key zone that we can look for possible buying opportunities. This market is trend and there's a break of structure in this market. Now lower time frame price action, if we look at the 1 minute and the 5 minutes and the 15 minutes, especially the 15 minutes price action, that you can see the market tested that 10 EMA and then rejected slowly back above. So we have another 5 minutes to candle close. What we are looking at here, the market to break that low, retest that support, and then to trend back up again. If this 15 minutes candle not coming further below, if it is closing as a doji, still you could see that upside bias possible, as this is a long-term bull market, but it would be look to see that it's coming for another retest. That's where the best entry would be for this potential bounce back to the upside here in this market. getting rejection here in that market for the price to potentially bounce off that level, which is showing up to be the market structure to be bullish here. That you can see it's tested that high, tested that low, and expecting the price to continue to trend back up here in that market. This is a bearish angle from the 50 minutes. The market is coming back below further here, and that is where looking to see that this market potentially to come further back below from this 15 minutes price action, that the price to test and then to potentially react back again upside to create a new higher high. And was expecting it to break that low. It didn't break that low. We might see bounce or potential continuation back further below here. And because we are on a bullish market structure, would like to see the market to trend down back below before we look for the entry. Patience is key, as we have opened quite a few trades and successfully closed with most of them, majority of them, with a bigger peep profit target. That's what our goal here is, to wait entry and then take the bigger peep, take the bigger profit target. That's where we are looking at in this market. That being said, guys, it is an incredible session here with all of you. Previous session we had an incredible trade, is still moving in the direction that you opened. Looking for another entry very soon. We still haven't got, it's there. We had quite a few trade that we have opened early. If we look at the early today, the trade that was open, this trade was open using our system, which has given us 100 pip on a single trade with only 18 pip stop loss. How many pip stop loss is very important to look at. This is another trade that we have opened using our system. Also, if you look at that entry at 4011.73 and TP target 4030.40, 200 pip with a very, very small risk, only 0.25% risk in the trade, that has bounced back straight back to this 200 pip on a single trade. That's what we need. That's our focus here, is to look for the entry with a bigger profit target. The other trade that we have opened again in using our system also has given us one single trade 300 pip on a single trade. This one was a live trade. We have opened with a scalping move within a very short period of time. So on a single day using our system, we have gained, you can count how many pip, and it's all those trades that I'm sharing in the group as well, that how the trade was open. There's more information on the premium group, will be how you can learn the strategy and also can be part of that system. If you haven't joined the premium yet, you can join the Telegram. You can find link below this video for more updated information about how to access the premium group. That being said, guys, it is an incredible session. We will be looking to see that next session again coming very soon. This is a big week, as tomorrow coming up there will be speech from Powell, and that's gonna make another volatility in the market. Until that, guys, stay well, stay happy. Any question, don't hesitate to ask. I'll see you again very soon, trading live together. Until that, stay well, stay happy.